Rumble ticker RUM is down 9% as we're recording this video. Now, what are the key levels we're paying attention to and how are we looking to trade this stock? So to quickly zoom out this stock has been quite predictable in the past. So as we came down into kind of this 720 area before, then you can go back and watch the video, we made one there. We were getting long bias, we were trading options, but trading a long bias into its fair value area. So trading kind of the low sevens into the high 7/low 8s. So we traded there, and then obviously we came into this area. This is why it's always key, and I'm covering this now because this is important if we come back to this level. This is considered fair value on the stock. So normally that's why we trade to this level, but once we get to this level, we get out of the stock because from here it comes a gamble. Very unclear whether it will continue up or continue down. So that's why we take profits here. And again, the same thing, I'm going through it now because that will be key. Now, we are selling off, break through this support, and again that's because you're getting that retest. If you retest it, you're obviously a lot more likely to break through. So now we're pushing down and we're testing these supports now for the first time. So these supports I'm definitely paying a lot more attention to now. So yeah, around 615 you have our first deviation from the 1 year and also our second deviation from the 6 month. So it's two really strong supports at this level. So again, we can watch this from an intraday perspective, either look at it as a potential day trade long, or again can definitely still be looking at it from a swing trade perspective. However, if we start to break this, which actually kind of looks like we could be doing now, this could create a bit of concern, because if we break this, we are going to come down to that kind of all-time low, 52-week low of 581, which is basically here. And if we break this, then obviously we don't really have any supports in line apart for the standard deviations we're going to provide, but then it should kind of free fall to that next key support, which would take us all the way down to around 510. And that's why if I was getting long bias now, I would be looking at it with protection. So normally how I would trade a stock like Rumble is get long the shares, but get also long a put to define that downside risk, so we know exactly how much risk we're taking. While also giving it time to play out and not having to stop out if it kind of temporarily pushes to the downside. So again, at support now, if we break this, we have a 510 support, and if we go any lower, a 450 support as well. So again, these are going to be the three key supports we're paying attention to if we continue to push to the downside. Now, what do we want to start paying attention to as targets? So if we're getting long bias here, looking to trade it to the upside, 720 is going to be that first target. Going to take some profits here, obviously move our stops, but if it does continue to go higher, and also this isn't one I would short because it's still considered oversold at this value, but where my main target would be is again coming into that fair value that we talked about before. So as we come into 775 to 825, that's fair value. So really looking to take basically all the profit as we come into here. Out of my swing trade, I'd be out completely coming into this level. And then if we did break this area, then that's where you start coming into more short bias levels, which would be 920, 940, because then you're coming into that oversold territory. And as well, just one thing to kind of note as well is if we go over to the chart, right above those high probability sell areas, so 940, 930, you can see at 980 you have the anchored VWAP. This is key because what this anchored VWAP is basically a VWAP, but since its IPO. So this is going to be a very strong resistance if you came into here. Again, if I was long, I would never be holding a stock really through this level because really high probability, it kind of does what it does every time it comes into this level, and that's sell off. So that would be really a nice short bias level where we can look to trade. And again, normally I would trade that with an option hybrid, short the shares, buy calls to define that risk, because again, if it goes through, we want that definition, but also we don't want to cap our upside on a stock like this, and that's why we do the short the shares, buy the calls, so we still have basically unlimited upside until obviously you can only make so much to the downside because you're shorting. But yeah, really here we want to define that risk at say $10. If it goes any higher, who cares? We just still take the same loss, but we want the upside potential, because if it goes to the downside, we want to be taking profits on the way down, because again, that's where you can get the really strong moves. NIO is down over 10% today. Now, what are the key supports and resistances that we're paying attention to? So firstly, to know what you can see today is we kind of keep pushing towards this 925. Now, what is this? This is the low band of our fair value. So we have our fair value area between 925 and 10.55. So normally when a stock's within this range, I don't like trading it within here because again, it's at fair value. And me as a reversal trader, looking for moves away from that fair value and then trade towards it. So as of right now, we're breaking the lower end and it looks like we're going to push to the more oversold area. So what are some key supports if we push to the downside? So a relatively close support to current price is going to be the 880 level. This is our first deviation over on the 6 month, so will be quite a strong level. And again, we are doing this move on quite strong volume. If you look back, we haven't really seen this for kind of at least kind of a few kind of weeks. So we're getting quite a strong move to the downside, and again, 880 is going to be that first support. And if we can break that, we have our next super strong area of support at around $7.05 to around $6.90. And this level is actually, if we can see a move to here, is probably where I'm looking to buy, because not only will that take us to a 52-week low, but it will also be our second deviation on the 6 month and the 1 year first deviation. So kind of 3 key kind of supports coming into this area that I would definitely want to be paying attention to. So that's going to cover the support side of NIO. Now, what are going to be some targets or short bias areas that we're looking at when I'm looking at NIO? So again, we talked about the 925 to 955. This is fair value area, so normally not something I look to trade, but or trade off of, but instead trade to. So again, if we're long 880 or long $7, that will be our target, but not looking to trade within this area. So instead, need to wait for a move past 1050, and then we can take us to our first resistance of 1150, which is again our first deviation on the 1 year. If we can break that, we have another strong resistance at 1230, which again is our first deviation, but this time on the 6 month. So that's going to cover the key upside. I mean, the main focus is on the downside as of right now, because markets in general are just quite weak right now. Everything is really just quite strong in a sell-off. So again, more looking if we can kind of catch these lows, try and play the bounces off of these levels. And again, we use kind of fair value as a target. And then we could be a bit more short bias coming into 1230 or 1150. And if you're not a short bias trader, you only like to trade to the upside. And again, these can obviously be further off targets to be paying attention to. Unity, ticker U, is down nearly 9% today. What are the key levels we want to pay attention to, and what are the catalysts that are sending it on this downward spiral? So firstly, the catalyst down to their fee policy. You probably saw about this, whether you're in kind of the developing, trading, gaming niche, anything like this. It was actually quite a big issue. And again, it was just to do with the fees they were going to change and kind of charge their developers and the game makers, which was actually going to make quite a massive change and create quite a lot more fees, which again can sometimes, I guess, be good for the company, but you had a lot of backlash, which again is going to lead to the boycotting, which is never going to be great for the company's image. Also, you actually saw quite a few games even pull their titles just because of this issue. So firstly, that's catalyst. What are the key levels we're paying attention to? So the first one I think we should note is this 3360. This is the 6 month first deviation, and didn't kind of work as a support, even though it was the first time testing it recently. But again, if it fails on the first move, we look to trade the second move, which is testing it as a resistance, and then trade the move. So worked, the support failed, resistance ended up working. So again, as long as you're getting the right risk to rewards, they use, that still works, doesn't really matter. Anyway, that's from the day trading perspective. What are going to be the further out levels as well, and also swing bias levels. So if we continue to the downside, 32.25 first deviation, but on the 1 year, strong support. If we come down to here, could definitely see a move to here today, considering we're selling off of this level. We're going to retest that low. You might see a bit of buying pressure, and then if we kind of crack through, 32.25 is what we're paying attention to. Now, if we did end up going any further, then we do have further supports at $27.80 and $27, which is really actually more of the range that I'm looking to trade, because obviously we've had this massive move recently, which we kind of show you on this chart. A really strong move, which was actually quite nice to trade. We got quite a few short bias opportunities on this move. I think 2 out of 3 trades worked, so that was quite nice. And now we're selling off to the downside. If we can kind of capture the lows of the year, I think that could be quite a nice long, even if there's not a full-on bounce, because I don't know if we'll see a move back to kind of those $40, $50 levels. But trading at definitely a few points off these lows is kind of how I'm looking to trade it. But anyway, we covered the supports of, again, 27 dollars. We've got the 32s, which is what we covered before. Now to cover the resistances. So again, if we're getting long, whether that's at this kind of $33 level or all the way down at the 27, my absolute final target would be this range here, which is 37.50 to around 39.50, because this is considered fair value on the stock. So at least from how I trade as a reversal trader, we look to buy these lows and trade back to their statistical mean, back to their fair value, which again in this case is 37.50 to 39.50. And the reason for that is this move is quite predictable. Once we come into this range, the move after here is not so predictable, and so that's why I don't like trading once we come into that area. Now if we go higher, resistances, and this is more where I turn short buy, so where I start looking to short the shares of Unity, would be at $43 at 45.20. Again, these are first deviations between the 6 month and 1 year, but on the overbought area. So again, above fair value, overbought, and if we're below fair value, these are oversold areas, so areas we normally look more to buy. AQST is down 9% today. What are key levels that we want to be paying attention to on this stock? So to quickly cover the supports first, looks like we're pulling back as of right now, and if we can come back down to 145, this is our first deviation on the 1 year, so it can be quite a strong support to be paying attention to. However, if we end up breaking that level and continuing lower, we have two other supports to be paying attention to. Both of our second deviations, 108 is our second deviation from the 6 month, and 95 cents is going to be that second deviation from the 1 year. So kind of three strong supports to be paying attention to. On the other hand, if this stock gets bought up or it does some sort of another run, what are key resistances to be paying attention to? But before we get into the resistances, we have 195 to 215. This is known as its fair value area. So how we normally use this level is if we're reversal trading, we're usually trading to this range. So if we're, say, long bias on AQST, that would normally be our target. If we're getting long 145, targeting kind of 195, or again, if we're buying the lower levels, if we get there, this would normally be used as our target. And again, the same to the upside. If we end up breaking through this level, coming to 145, we normally short to the fair value area. Now, from an investment standpoint, you can also use this level, and the way we like to use it is if you're looking to invest in a stock. And again, I can't say anything about AQST, not something I've done full fundamental analysis on, so not anything I'm buying for the long term, but if it's something you're looking to invest into, you normally want to be buying it at or below its fair value area. So kind of below 215 is the ideal price to be investing in a stock like this. So as of right now, if you're looking at investing, could be considered discounted. Now, to cover the resistances, just in case we do get that upside move, we have 245, 266. These are our first deviations. 245 is the 1 year level, 266 is the 6 month level. And if we were able to break out of both of these levels, we do actually have another resistance, which is if we break the 52-week high, and that's going to be at $2.95, and that is our second deviation from the 1 year time frame. AVGR is up over 60% as recording this video. Now, what are key levels that we want to be paying attention to? So firstly, you'll be able to see, obviously we've opened up, we've come to test this 1050, sold off the first time, tested it again, failed once more. Now, what is this 1050? This is our first deviation from the 6 month chart, so a strong resistance. Now, if we're able to break this, which again, if you test it, normally on the second time you break, but in this case, we kind of get more of a double top. But if we test it for a third time, I would be looking more for that break. And if we can get that break, looking for a move to 1165, which is again where we can then flip maybe a bit more short bias. Now, it's not available to borrow and has no option. So to me, this is one of the things I would normally look to short a stock like this, but again, as we can't short it, this is going to be more for long bias traders or trend traders who are looking to make money on this upside move, and instead just looking for targets considering we can't short it. So again, 1050, 1165 are going to be those first sets of targets. If we're able to break out of this range and do a further push to the upside, then we have targets quite far off, but it's going to take us to $15 and $16.25, which is going to be our second deviations. The dashed line is the 6 month, the solid line is the 1 year level. So going to be some strong resistances if we can push up to those resistances. Now, one thing to note is kind of below current price, maybe areas we could be potentially a bit more long bias, is between $5.90 and $7. This is our fair value area. So again, that's why I don't really like buying a stock like this as of right now, because we are more in the oversold territory. The way you can normally look at stocks is if you're above fair value. So again, this line over here between $7, $5.90, you're considered more overbought. So normally me as a reversal trader will look to short. And on the other hand, if you below the area, then you're more oversold. So normally I'll be more long biased, looking to buy that back into fair value. So again, we have that fair value at here. So normally we want our average at or below this level. Again, if you were trading this long bias. But if we do sink below it and push lower, we do then have supports to be paying attention to at 245 and 135. Again, very far from where we are now, so I don't think the downside move on this is going to be all that much of a focus. And again, that's why we kind of said probably won't be something I trade, because it's not my trading style. But if you are long bias, you're trying to trend trade this stock, it's just paying attention to basically the 4 key resistances, which is going to be $10.50, $11.65, $15, and a final one at $16.25. Genius Group, ticker GNS, has been volatile once again. The stock is just, a massive volatile stock recently, up 23% today. Now, what are some key levels we want to be paying attention to? So the first thing, and kind of I would say the most important thing to note, is where are we currently sitting? So obviously we had this massive run up, we've obviously sold off, given back probably about 60-70% of that gains. And now we're back at around $1.10. Now, what is this? What are these grey dashed lines? So what these are fair value. This is the 6-month level. This is the 1-year level. So between here is fair value between a 6-month and 1-year time frame. So normally what we do with this value is, if we're looking at investing in a stock, we normally want to be buying in this range or below. If we're looking to be long bias a stock, we're normally looking to, again, buy it below this value. So what this normally means then is, from how I trade as a reversal trader, if it's above this value, I'm then more short bias. So seeing that on GNS, and again, if you're a long bias trader, trend trader, then what you can do is use these as targets. Again, same levels because they're just key, but whether you trade reversals or you trade or you're a long bias trader, you're trading to targets, you're going to want to be looking at the same levels. But if we break above this 112 and start pushing to the upside, we have resistances at 180 and 265. So again, for me as a reversal trader, can start looking short bias at these levels. And again, if you're a long bias trader looking to trade to targets, 180 and 265 will be some good targets. I will probably avoid the 180 if I'm a reversal trader like I am, just because we've kind of done this level recently. So I'm not as keen on it. But again, if you're a long bias trader, can definitely be a good area to either lock in profits or at least start to move stops. But again, if we go further, whether I'm a reversal trader or trend trader or long bias trader, looking to take profits or open that position coming into 265. Now, if we break that, just we'll cover some more resistances, just in case we kind of break that recent high. That will take us to 350 and 415. Now, again, the stock is very volatile. We only see that from the kind of last few weeks of performance. But again, if we zoom out, we look at the standard deviation, we just look at a 1-year chart, you can obviously see when we went down to a low of 30 cents, pushed back up to a high of $8. So the stock is volatile, it can make moves. So what this does mean is, if we are shorting these moves, like I would probably be doing, then obviously looking at the trade plan and buying calls to protect ourselves, because again, if we are shorting the shares, we want protection, don't want max losses, we don't want to be blowing accounts off trades like this. Again, the probability that they pull back is really high, but in that off chance they run, or you don't have enough kind of capital to sustain a move against you, obviously we want those calls for protection. Just makes sense, and normally you can get them quite cheap. Like if we go 9 days out, you can even get a $1 call for, you're paying about $22 in premium, which isn't too bad to define your risk. So I'm paying attention to that. And again, it's a good thing as well. If you're a long bias trader or short squeeze trader, that can be a good thing to know, that this stock can easily run. So again, if you're not short bias, you're just trading with long, again, these can just be targets to either be adding at or taking in profits. And what we mean by taking profits is obviously the first time we come into them, reducing size, but then paying attention to, if we retest it, break above, come back to test it as a support, then that's where we could be looking at to add in if we're a long bias or trend trader. Maple Bear, also known as Instacart, has IPO'd yesterday under the ticker CART, so C-A-R-T. It's down 5% today. Now, what are we looking at key level wise, and what are we looking at, and how are we looking to trade it? So we are down nearly 5% today. Really, since its IPO, it did open much above the $30 or $31 that it was meant to come out at. Obviously gapped up, and then kind of that whole day you just sold off, and today obviously we got this gap down, we're continuing this sell-off. So what are we really paying attention to? So with this kind of stock, again, we don't really have any significant levels, so it's probably going to be paying more attention to the psychological level. So you're going to have $30, $25 or $27.50. Obviously just the key psychological levels on both the support and resistance. The resistances will be easier to play, so again, if you're long, then these could be used as targets. Don't think we can currently get shares to borrow. It's hard to borrow, so you may be able to. But if so, that's when the anchored VWAPs can come in handy. So again, this is a 2-day anchored VWAP, so basically just since it's IPO'd, it's anchored to there. So if we come into here, again, can be target on longs, or can also be a short bias area if you're looking to kind of sell and trying to get into this trend. Now, how are we really looking to trade this? And what I would be waiting for is to the options to launch. So again, we had the same trade opportunity on ARM, which was that big IPO that happened last week. And as soon as these options comes out, the way I'll be looking to do it is the straddle. So again, this is exactly how we traded ARM. I got out of it today. We bought them around $480 a contract. We sold out today for $550. And all it is buying both the call and the put. So for example, again, we're going to have to show you this on ARM because on Instacart you can't currently do it. But again, the options should launch end of this week, early next week. So all you would do is go over to the calls. So again, let's say we were sitting at $30, you would do probably 35 and the 25, or 31 and 29. And again, you would buy the put that's below current value. So right now we're sitting at 52, so we could buy the $50 put. That will cost us around $225. And then you also want to buy a call as well above the strike. Again, we're at 52.60, so we don't want to do the 52.50, we want to go to the 55. So again, then we're looking to buy that call as well. So in this case, that's going to cost us another $255. So it's going to cost us just under $500 to buy both the call and the put. And what this will do, and again, if we add both of these on, we can go into analyze modes and show you. So what this will do is mean as long as price moves from where it currently is, you'll essentially make money. And again, the expirations will probably be quite far dated. You can see on ARM, they're about 30 days out. You'll probably see the same thing on Instacart. It's unlikely that they start doing weeklies right away. But again, this is exactly what we did on ARM because we know more like than not, it's going to be volatile its first week or two. It's going to see the same thing with Instacart. So again, if you're kind of getting an average around here, as long as it moves out to the sides, you can make money. And again, that's exactly what we saw with ARM. We bought in when it was kind of just, I think it was on this day here when the options launched. So again, if it went up massively or down massively, we'll be printing money. And again, that's exactly why we did it, because we knew very rare that it would just kind of stay where it was. So it's exactly how we looked to trade ARM and did trade it. And just kind of pointing this out because it's exactly how we'll look to trade Instacart. Looking to play the straddle, so you buy both a call and a put. And again, as long as it goes one direction or the other, you should be making money. So again, that's how we're looking to trade CART. Because as of right now, going to be hard to trade kind of the technicals and stuff, because again, it's just a brand new stock. So really, it's just the anchored VWAPs that I would be paying attention to. But again, it's just, can we get the shares available, which would be the question. So to me, I'm waiting for the options, but that's the trade plan I have for Instacart. Novavax, ticker NVAX, is down about 1.5% today. But the main reason we're focusing on this stock is they are still pending some FDA either approval or rejection. This stock has been range bound, so what are some key levels we want to be paying attention to? So as of right now, from a resistance standpoint, we've already got these dotted out. That's going to be $8.70, $9.25, $10.35. I think $10.35 is going to be this nice level to be paying attention to, because again, we have been range bound for really most of this year. Since kind of February, we've been range bound. Every time we come in, well, the 2 times we've come around this area, we've been selling off, and then obviously the other times we've done the sell off a bit earlier, kind of around this 9.25. So definitely things we could be looking at doing smaller size at the 9.25, but if it's pushing up to the 10.35 before FDA approval, then they can usually be quite good short bias levels. Again, if the FDA approval, that's always going to be stronger than technical levels, so obviously the fundamentals will be the driver. You probably should let it play out a bit before looking back at technicals. Now, if we end up breaking out of this kind of range bound to the upside, again, this will probably only happen if we kind of get some sort of FDA approval, but then we're paying attention to $12, $14.25, and a final level at $19.20. So those are going to be the key resistances. One thing I want to note with these resistances as well, just in case you're watching this a few weeks or even a month down the line, is what levels are changing. So these dashed lines, these are from the 6-month chart. These haven't really been changing since it's been in its range bound. Basically, since February, these lines aren't really changing. So kind of $8.70, $10.30, $12 will roughly be the same, even if you're watching this a few weeks or months down the line. So we're still paying attention to them. However, the 1-year levels are changing a bit quicker. So if you're watching this, I would say a month or longer down the line, then I would start to ignore the 9.25, the 14.25, and the 19.20, just because these levels are changing a bit. Again, that's only if you're watching it a month down the line. Now, just to quickly note the support side, again, just looking at kind of what's range bound, kind of this, well, kind of where we are now, normally tends to be kind of the low end of where this range goes. So again, could be a potential buy if you're looking to buy the range bound opportunity. But if we break lower, 10.50 is going to be that next key support to be paying attention to. That's our 6-month first deviation. And again, that's normally what we're paying attention to because these 6-month levels aren't really changing. So they can be easy to trade. And just below that as well, we have the second deviation on the 6-month at $4. So they're going to be the two kind of key supports to be paying attention to. Could also be paying attention to kind of where you are now. That's kind of just been previous support, but not a deviation. So I'll probably be a bit more patient to the 550 than I would potentially be quite long bias on it. And again, if we're going to the upside, looking at the key resistances, I'm keen on anything kind of above the 10.35 or higher. Just because, again, that's where we can get kind of the highest or the best trades, at least looking back, going back a few months. Palantir, ticker PLTR, is down 5% today. Now, what are key levels we want to be paying attention to going forward? So $13.70, this is a key support to be noting. This is our first deviation on the 6-month chart, so normally quite a strong support, and especially considering how Palantir has been moving, especially more recently. Obviously, it's done that big run to the upside. You're coming back, you're testing this level as a support now. So if you think this is going to continue higher or you're more of a trend trader, these are normally the entries we would look to buy and take long. So that's our first support to be paying attention to. You can see it worked as a day trade, got a nice bounce off there as of so far. Now, if we end up breaking this and going lower, then we're targeting $12.15. This is going to be that first deviation as well, but from the 1-year time frame. And if we go lower and we can kind of start cracking below that $10 mark, which again going to be a strong psychological level, we have 9.75 and 8.30. 8.30 is the 1-year second deviation. 9.75 is the second deviation from the 6-month. So these are going to be the 4 key supports I'd be paying attention to on Palantir for downside targets or buy levels if you're a long bias trader. Now, thing to note as well with Palantir, fair value is between $16 and $17.60. What this normally means then is if we're looking at investing a stock, this is how we use fair value. If we're investing, we want to be buying at or below that level. So from investing, as of right now, Palantir is at a relatively good level if we were looking to invest in it in the long term. But what it also means is now we have targets. So again, if we're getting long $13.70 or below, so again, if we're getting long at any of these targets, our absolute final target to the upside is normally going to be fair value, because then it turns into a gamble in which direction it will go. So we'd be targeting $16 as a kind of final target if we were taking it long at $13.70 or any other of these supports on the downside. Now, to start paying attention to the resistances, we'll just note 2, because we would have to start pushing near to those 52-week highs to kind of even be getting to these levels, but that would be 19.75 and 21.50. Now, again, the way we tend to use these levels is if you're a trend trader and you're willing to hold through fair value, which is not normally something I will do, these can be used as targets. But if you're more like me, a reversal trader, you like to trade to its fair value, what we will tend to do is short these levels. Now, as these are the first deviations, they're never as high probability as the second, like these blue lines down here. So normally I'll take reduced size on these sort of levels. But if we do push there, can normally be quite a nice trading opportunity to kind of trade 1975 to say 1760. Revance Therapeutics, ticker RVNC, is down 26% as we're recording this video. Now, what are the key levels we want to be paying attention to today? So, to quickly go on to the supports, because again, we are selling off, even though right now it is getting bought into. If we do continue lower, we only really have one key layer of support, which is somewhat close to where we are, and that's going to be around $8. So, $8, you're going to have the second deviation from the 6 month, which is this blue dashed line, and then you've also got the third deviation from the 1 year at $8.10. So again, two really strong supports if we're able to make that kind of push down on this stock. So paying attention to that, and we do actually have one more support, but very far off, so not really too focused on that. That's going to be at $2. I mean, that's just going to be if this stock gets absolutely smashed, then we could be paying attention to that. But again, very far off, so I think the main focus now is if we kind of get a second leg down, we could be looking at an $8 support. But as of right now, kind of in no man's land, don't really want to be buying a stock like this. I'm not going to be buying unless we get down to that kind of low. Now, what are some resistances or targets we can be paying attention to? So again, if we were long anywhere, long bias, anywhere on this gap, our average is below here. We're going to really be targeting the second deviation from the 1 year and first deviation from the 6 month, which again is going to be at $13.80 to $14.25. So kind of a key range of resistance where if you look at long bias now, that could definitely be a good target to be paying attention to. Now, if we go high, we have our next level around 1660. This is going to be that gap fill from basically yesterday. So always paying attention to that, because again, if this is going to continue to sell off, sometimes you can come back, retest the gap fill, and then you do that continuation to the downside. And just to quickly note, one resistance high, just in case we do get bought up and break the gap fill location, our next deviational level will be at $19.50 as that next strong resistance. But again, the stock is more selling off as of right now, down about 25%. So it's more paying attention to if we can hit $8, then I'm more long bias on this stock. Really, unless we come down to this level, I'm personally not going to be trading it. But if you were long now, really just targeting kind of that $14 range. Steelcase, ticker SCS, is up 30 or just under 30% as we're recording this video. Now, what is a catalyst and what are key levels? So for the quick catalyst, so again, it significantly improved adjusted earnings per share of between 80 and 90 cents. This is well above the 66 cents markets were expecting. So again, massive beat, which is always going to be obviously a good catalyst. And so because of this, again, I do think it will be quite rare that we see a move all the way back down to kind of 880 in the near future. So it is quite a bullish move, but it's not to say that now where we are is justified, because from how I trade, we are now extremely overbought, and it's now something I'm short biased at. So what you can see here, these blue lines at 960, these are our second deviations between the 6 month and the 1 year. Then coming into these green lines, these are our third deviations between the 1 year and the 6 month. And then this red line, which is our fourth deviation between the two charts. Now, we don't tend to ever see stocks really trading at their fourth. And when they do, tends to be very short-lived. And again, that's why you're kind of seeing we start to get some consolidation as we come into here. Because again, a lot of people, you probably see quite a lot of more, maybe not institutional buys, but more longer-term traders kind of getting out around these areas just because it's very extreme, super extended. So it just really kind of makes sense to be getting out around an area like this. But again, considering then we have key levels at 960, 1030 and $11, what does this mean when we're above it? So to me, this is a really high probability short bias stock and a short bias opportunity in general. Now, if we go over the trade, we can see first it is easy to borrow, does have options. Now, this is great because it means we can play the stock short bias down to the targets of $11, 1030s and the 960s while also being protected. So again, we can short the shares. We're probably not even going to have to pay a fee because again, easy to borrow. So we could be shorting them right now around 11.25, and what we can do is either buy a $10 or $12.50 call. And again, what this will do, these are 30 days out, so we can give it 30 days to play out. And what this will mean is, obviously, if we buy the $10 call, if it stays above $10, obviously, you're going to kind of take a loss. But again, it's defined to whatever you're paying really for this call. So you're paying say $150 for the call, it's over 120. So you're really only risking about 25 cents per 100 shares that you, $25 per 100 shares that you're shorting. So the risk on that side isn't bad. And then if you're buying the 12.50, you're actually taking on quite a lot more risk, because you're also paying for the premium difference. So again, you're going to be paying $125 of risk per 100 shares in the underlying shares, and then $20 in premium. So you'll be taking on a bit more risk to take out that further call. But again, then there's more chance that you can end in the profit. And again, that's why normally you take on, or it's cheaper to buy the premium. But again, I'm probably going to go with the $10 ones, because I do think we'll fall quite below that $10 again. We got the first target coming in at around 10.30, so that would be first target, but we would expect a breakthrough there, and I'll be targeting kind of around 9.60. Then I think we would be trading at a bit more of a reasonable level. Again, not really expecting a move all the way back, just because again, this was good earnings. It was very strong, so getting a move all the way back probably isn't likely, but it's definitely seeing a pullback to a more reasonable level like 9.60 is definitely something I could see happening. So that's more my focus on the stock. We went through the key levels and I went through my trade plan. I hope you enjoyed the video. Hope to see you next one, and that's it. Peace. ARM Holdings, ticker ARM, is down nearly 6% today. Now, obviously, this is the stock that IPO'd on Thursday, probably the biggest IPO we'll have had in a while, and probably going to be the largest one we will have for a while. Now, what are the key things to be paying attention to? So quickly, again, in recent IPO, we're not going to really have that much of key levels. We can see today we almost tested the all-time low. Obviously, that's at 55.54. Kind of bounced just before, and we're getting a bit of buying pressure. If we come down to retest this, I'll be looking at more for a break on that second move. And that may provide more of a day trading opportunity. If we break below it, retest it, then could look to short it on that second move. So that's kind of what I'm paying attention to, is kind of just quickly to draw technical levels. But it's more the trade plan I'm more excited for on the stock like this. So obviously their options did launch today. And normally on these kind of, stocks which are going to be super volatile, I was assuming the options were going to come out and be a lot more expensive than they were. However, it's come out and really they're not too bad. So obviously the closest to expiration is 32 days out, so 20th of October. And you can see the premiums aren't anything crazy, which I thought was quite of a surprise. So the way I'm actually looking to trade this, and my trade plan for this, is a straddle. Now, looking at two different ways to trade this, or well, they're both straddles, but just different strikes. But we can see right now going to cost us just under $800 to take a single contract or a single straddle long. So again, this would mean if we didn't move from where we currently are, we would basically go and end $800 in the loss. Obviously, if you push to either side, you start to lose less and less. Now, with this, the break even turns at $65 or just above, or about $49.50. Now, that's why I quite like this, because again, recent IPO, we're currently sitting around $50, or what was it, $57. So is a move to $49 or kind of $60 all that crazy? No, not really, especially within the next 32 days. I think this move is very likely to happen, and that's why I'm looking at the straddle, because I'm probably not going to hold it to the expiration, but seeing a move down to, kind of the low 50s, high 40s, this week, next week, don't think that's all that extreme to say we would see that. Or again, even a move to the upside. I think the downside move is more likely, but if we did get the upside move, again, a move above 60 or so, is that going to be all that unlikely to see? No, not really. So that's why I like the look of the straddle, because again, we can find that risk around $800. Above 65, we start making money. Say it goes to $70, so kind of where we hit on that Friday. It's going to be up about $450. And again, if we go down to say $45, you'll be up $440 as well. So probably not the best from a risk to reward standpoint, but I think there is just a high probability of the trade coming off, and that's what I'm looking at it. And again, we can kind of reduce that risk slightly if we want to go for a bit more of kind of delayed straddle. So what this means is there's more of an area where you take your max loss. So you can see between $55 and $60, you take a max loss of around $580. However, for that kind of having a wider area to take a max loss, what it does mean is the max loss is lower. And again, it does kind of widen the break evens out slightly more. But it does mean now from around $66 you'll be in the profit, and to the downside anything kind of below $49 you'll be in profit. So again, looking at the same thing, if it goes to $70 you'll still be up about the same at around $420, and again if it goes down to $45 you'll be up around $420. So this could make more sense from a risk to reward standpoint, and it's actually probably the way I'm going to trade this, because again I don't think it will kind of really even stay within this range looking a week or two down the line, and especially not 32 weeks down the line when this contract finally expires. So that's my game plan on ARM. Let me know what you're looking at and if you're looking to do a similar sort of strategy.